So today we'll discuss about pattern trading strategies. It will be really helpful for you, those who are new to the options trading, or maybe you are new to the trading itself. We will share you some of the experiences on how we can identify pattern. We'll identify some live patterns on how we can trade, and also we'll show you some of the trades what we have done, how we analyze the intraday trading opportunities. We'll discuss about scalping. What is scalping? What is intraday patterns trading? We'll discuss about how to trade intraday options. It's going to be a bonus topic where we'll show some trades what we have done, and also we'll try to trade live based upon the patterns what we see. We will see some of the secrets of becoming a profitable trader. What are the key things you need to know in becoming a profitable trader? And then we'll discuss about how to define an edge. So there are 5 different skills which is required to be a profitable trader: technical analysis, open interest analysis, FI data, futures data, and the global market sentiment. First, we'll start with technical. We'll see what is candlesticks, how the patterns are being formed, how to identify the profitable trading strategies, and we'll show you some of the trades what we've done on following these strategies. So what exactly is pattern trading? What exactly is technical analysis? So you can see in this particular example, this is called as price action trading strategies. This is the basic concepts of trading for intraday, or if you want to trade for scalping or positional opportunities in the market. You need to understand what is the basic fundamental of price action. So price action is behavioral of the candlesticks with respect to the volume, right? Price action means the price will fluctuate for that particular time or for that particular volume. So we'll go in detail about this. We'll show you some practical examples also, but first let us understand what exactly is a skill you need to know, what exactly is a price action, how exactly it will work, how you can identify these kind of opportunities in the market. We will try to see some of the opportunities in the market. We'll see how exactly the price behaves, how to identify the buying or selling opportunities for intraday. So basically, what exactly is price action? You can see that we have the green and the red color candles. But when you closely observe this, what happens is when there is a bearish day, there will be sharp fall in the market in the morning session. And after that, we may see some consolidation. So this is a battle between the bulls and the bears. In this zone, where you're not clear about whether the market is going to go down or market is going to go up. So basically, whenever we have a bearish day, there will be sharp red color candles. You can see the body of the candle is very big. So that means the volume is really high. And then there is a small consolidation zone where there is a battle between bulls and the bears. So this is where the market will take the support. If this support is broken, then this is the point where you need to initiate the short trade. This gives the confirmation that trend of the market is going to be bearish. This is one pattern. And then we see that again, there is a fall in the market. But sometimes what happens is whenever there is a fall in the market, the consolidation, after the consolidation, there is a breakout here. Breakout will happen on the upper direction. So this is called as consolidation breakout pattern. So in this, you can see in this previous example, the market was bearish, but in this also the market was bearish, but the breakout happened on the upper side. So you can just closely observe this price action behavior. In the previous candle, the triangular formation was happening on the upper side. You can see the line here, it is inclined towards downside, which the candle size are reducing from starting to the end of the breakout. But in this, the candle size are reducing at the end. You can see the triangle is completely opposite. It's inclined towards upward. So what is happening is any dip in the market, the people are buying. A lot of people are interested to buy at this particular price. So what is happening is there is a lot of accumulation which is happening in this particular zone. So by looking at this particular 2 examples, right? Once in this example, there is a lot of selling pressure. In this example, there is a lot of buying pressure. Whenever there is a breakout here, then the stock explodes in that particular direction. And whenever there is a breakdown, the stock falls into that particular direction. We'll try to identify these kind of setups in the practical trade. We'll see some of the stocks where we can identify these patterns, how we can identify which time frame to select. So everything we'll try to see in the live market. This is 2 patterns. The third pattern is called, let's say whenever we have a bullish day, let's say the market capped up, then we will be having some consolidation. There is a fight between bulls and the bears. We don't know exactly where the market is likely to go. Then also we need to see this inclination. So this is the basic theory. I'm just giving you the very basic logic about price action so that you try to identify this in real market. We'll see how exactly this will work so that you can spot the buying or selling opportunities in the real market. So basically, we will try to identify some of the breakouts and breakdown patterns so that we can place the high probability trades in trading options. So let's go to the bullish patterns. There are two bullish patterns which are highly profitable, which we have been trading in the market over the past last from 5 years, and these are called as highly profitable patterns. So in this, what happens is whenever there is a gap up day, the market opens gap up, there is a small consolidation, and then there is a breakout with a huge candle. This is called as a flag pattern. And then another bullish pattern is whenever there is a sudden dip in the market, then there is a consolidation and there is a breakout. These are called as bullish pattern. So let me just open the NSE India and will tell you how exactly we need to identify the breakout patterns. So for that, what you need to do, let me just share you the screen. First, you need to go to Google and just search for NSE top gainers, because we are identifying from breakout patterns the stocks which has gained the highest percentage gain, so that these are the stocks which can give the possibility of a breakout pattern. And once you go to this website, you will be getting the top gainers and top losers for the Nifty index. You just have to select the Nifty index, right? There are different index. We have the next Nifty, we have the F&O securities, right? Just focus on Nifty index. When you see the Nifty index today, we are seeing JSW Steel, Asian Paints, Titan, ONGC, Tata Steel. These are the stocks which has given the highest percentage of gain today. So let us try to analyze this particular chart and try to see how exactly the chart patterns are being formed in the live market. I'll go with the JSW Steel. Let us try to analyze how exactly this will work. So let me just open the JSW Steel. You can see this is the chart of JSW. Let me make it 5 minutes so that you'll be able to identify this particular chart pattern. So once you see this particular chart of JSW, it's currently trading around 711. So have a close observation of this particular chart, right? In this, we discussed about the bullish pattern where there is a strong bullish candle, then consolidation and a breakout. This is the first breakout, and then there is second breakout, third breakout, and then again we are heading towards the breakout. You can see in this particular zone, the stock is going with a flag pattern. This is called as a flag pattern in the candlestick analysis. So now, this price is an area where you need to look for buying opportunities, because you can see the previous 3 level. You can see the stock has rallied here. It has consolidated. There is a breakout. It was consolidated and had a breakout. Now it is consolidating. So here there is a fight between bulls and bears. How exactly you need to decide whether if you go for buying, what would be the stop loss and target? The simple method is, once you see this particular data, if you just look at the candlestick chart, it will be very difficult for you to understand whether the stock is at the top level or is it at the support level, or maybe you don't know exactly where exactly it will go. For that, we use some indicators which are highly profitable indicators. One of the indicators which we use is called as pivot points. So I'll plot the pivot points here. You can see, if you go to studies and just type in pivot points, and when you type the pivot points, these lines will be drawn in the candlestick chart pattern. And this will tell us, okay, where could be the support, where could be the resistance, or where exactly this stock can go in the live market. So now let us assume, for now, I'm placing the high probability trade, and I expect that, okay, this particular stock is likely to go up. Maybe it will go up to this level. So maybe to the recent high, right? So I'm expecting it's going to be the bullish pattern. So my stop loss will be this level and my target will be this level. Just assume this, I'm just going with the high probability trading setup. I'm expecting, okay, stock is currently trading around 711. So I expect maybe it can go up to 715 and stop loss can be 2 points or 3 points, right? Just see in this particular example how exactly the price action will work, because this is a bullish pattern. Most of the traders who exactly trade in the market, first they need to understand what to do exactly with the bullish pattern. You need to know, okay, if it is a bullish pattern, you need to look for buying opportunities. If it is a bearish pattern, you need to look for selling opportunities. So in this example, I'm trying to explain how exactly the price action will work and how exactly you need to decide buying or selling opportunities. So let me just show you some of the trades what we have done so that you get an idea about how exactly we trade. So you can see that some of the trades what we done in the morning session, right? It's like option scalping. So basically what exactly we have done is we had a gap up opening. Whenever there is a gap up opening, there will be small consolidation which will happen. So we try to capture that consolidation, and that is what we have done in today's session. We bought the put option, right? You can see the buy average. We bought around this put, which is 15,300 put. We bought at 86.35 rupees and we sold at 91.68 rupees. We just captured around 5 points in this particular trade. The volume traded is 3,600 quantity. So the profit earned is around 19,000 for this particular trade. Scalping trade, it involves capturing the small movements, but with a high volume. And the second trade, what we've done is buying the call. You can see here, we bought the 15,200 call. When we had a confirmation of the consolidation support, we bought that particular level with at 119.76 and we sold at 123.40. The quantity which we bought is around 9,000 quantity. So we made 32,000 in this particular trade. So both of these trade is just a scalping trades where we are just capturing the small momentum. But the most important thing, the reason why I'm sharing you this is just observe this particular trades what we're doing in this account. We are trading with a specific time frame. We are trading this in the morning session from 9:30 to 10 o'clock. From 11 o'clock to 12 o'clock, we are not actively trading. We are observing the patterns. And again at 12 o'clock or 12:30, we will find trading opportunities and then we'll try to place high probability trades based upon the setup. Right? Scalping involves placing high probability trades with a high volume and we try to capture a very small amount of profit. So in this account, we are engaging like 30 lakhs. This is like a scalping account. We trade the high probability trading setups and we try to capture a very small momentum. And our aim is we try to capture at least 1 to 1.5% in a day, right? Our stop loss is also 1%. And again, we are not 100% all the times, right? Even we do have some losses. Some of the days are losing days. Some of the days are winning days. But you can observe, you can learn from this trades what you're observing. We are trying to capture 1.5 to 1% a day, and we are willing to lose 1% a day. This is what is the discipline what we are following in this trading account. The capital engaged is around 30 lakhs in this particular account, and we try to capture 1 to 1.5% return for this particular account. So the profit what we made is around 50,000 today, but in the afternoon session, maybe we'll also take some of the trades. We'll try to capture some more momentum in the market, but just observe this particular trades. 3 things you need to learn. One is the time discipline. Second is the money management rule. And third is what will be your setup. So now let us go to the setup and we'll try to explain you what are the trades what we done. What is the logic behind this so that you exactly learn how to trade this kind of setups. For that, I will open up the Nifty chart and we'll try to explain you how we identified these setups for intraday. So let me share you the chart of Nifty and we'll show you what are the trading setups which we had followed in the morning session. So you can see this is the 15 minutes time frame of Nifty, right? Usually we use 15 minutes time frame for intraday trading because we find this is like a highly profitable time frame for us based upon our experience. And we use another indicator which is called as pivot points. Pivot point is a very good indicator for intraday trading because that will help you to identify where could be the support or where could be the resistance of the market. You can see in this particular, for today, there was a gap up opening. Nifty opened almost close to like 50 points from yesterday's close. It's around 50 points, Nifty opened gap up, but it was a gap up opening. And whenever there is a gap up opening, we have a pattern called consolidation pattern. This is the pattern what we traded today. And I will try to explain you how exactly this pattern will form. These patterns will form every single day, right? These are highly profitable patterns, and sometimes it may not form, but there is always a stop loss for that. I will try to show you how exactly we identify these opportunities, how we can also identify to trade profitably. Whenever there is a gap up opening, whenever the Nifty open gap up, right, we may see some sharp red candles, or we are not worried whether the market is going to be 50 points or whether the market is going to be 100 points. We just want to see whether we are able to see these kind of candles, right? We just see for these candles. We are just looking for this kind of sharp red candles. So that exactly happened in today's Nifty chart. I will show you the chart of Nifty. In this chart, what happened is we saw this big candles and we wait for at least for 2 candles, means we wait for at least for 30 minutes. We'll not directly jump into the trade. We'll wait till 9:45 or 10 o'clock and then we take the trade. So by looking at these 2 candles, we got a clarity that this is going to be consolidation pattern, because Nifty had a gap of opening and then there was a sharp red candles. So this gave a confirmation. Then we can get some opportunities where there are 2 trades what we did today. We captured this momentum on the downside in the initial trade, and on the second trade, we waited for consolidation and we took the breakout pattern. There are 2 kinds of trades what we did. First is we captured the momentum on the downside. The second is we waited for the dip and we bought at the dip. Let me try to show you this with the live market so that you get a clarity about what exactly I'm speaking with this particular chart pattern. First is we waited for gap up in the market and we waited for the Nifty to consolidate. And then we knew that, okay, there is a sharp red candles we saw at this particular time around 9:45. We got a clarity. This is going to be the consolidation pattern because we had a pivot line here. If the Nifty has fallen here, then Nifty has to take support here. It will try to face some support level and it will try to pull back. So at this level, we knew that, okay, Nifty will try to test this pivot line. So there is an opportunity here where we can buy the put option and we can try to scalp this particular trade. We taken this trade and we made around 19,000 in that particular trade. And the second trade, what we did is we waited for this particular dip. After the third candle, Nifty had a dip here. And this gave a confirmation that it is going to be a reversal because there is a pivot line here, right? Nifty had fallen here and it has taken consolidation. You can see the formation here. Just observe this carefully. You can see it is going in the upper direction. There was a dip here. The candle opened higher side. And then there was a dip here. This is where we entered and we captured the small momentum in the Nifty and we made around 30,000 in that particular trade. So basically, scalping trades, what we're doing is we are trying to capture this small momentum in identifying the price action pattern. You can see by 10:30 or 11 o'clock, we exited the trade. This is the morning session. And the second session, what we will be trading is around 12 o'clock to 1 o'clock. These are the 2 sessions which are highly profitable, based upon our experience. And in between this zone is called as a consolidation phase. At this particular zone from 11 o'clock to 12 o'clock or 12:15, we will not be having clarity about the market. There will be a lot of fluctuations in the market. But the morning session and afternoon session, you'll be able to find a high probability trading setup. So the consolidation pattern, which I explained to you, what are the conditions for this is first, there should be a gap of opening. And then the pivot line will tell you where could be the support. And from there, you can look for either scalping this or you can look for buying opportunities. But one of the most important thing you need to understand here, right? Sometimes what happens is, like a lot of people who have been trading, right? You may be having a lot of confusions. What is the stop loss? Why you should buy here? What is the target? What should be your risk? What should be your lot size, right? Just remember the simple thing. Each and every trade, whatever you're entering, right? There should be always 1% risk and 1% reward. You should always look for that particular range. If you're willing to gain 1% risk, if you're willing to gain 1% reward, always try to keep a stop loss of 1% of whatever you're willing. So in this, we are trying to capture just 5 points. We already knew based upon the account. I will show you how we calculate this. We look at the points we want to capture, what is the capital in the account, and how much lot we need to buy. Based on that, we execute the trade. Let's say in your account, you have 1 lakh rupees. Let's say if you want to capture for 1 lakh, just look for 1,000 rupees. You can also take a screenshot of this kind of pattern because these are highly profitable trades. And you try to experiment in your free time. Maybe you can just observe this for any time frame. I'm not telling that this will work only for intraday. This will work even for swing trading. I will show you some of the swing trading opportunities by the end of this webinar, where you can take the swing trades maybe for 1 or 2 days based upon this particular pattern, right? This pattern will work for any time frame, but I'm trying to share you in the live market so that you get an idea about how exactly this will work. Because until unless we are practical, it's become very difficult to teach. So that's the reason we've taken the trades so that will help you to understand and learn this. So here, what I'm expecting is these are the bullish patterns which we need to identify whenever there is a gap of opening in the market. Now, what if the market had a gap down opening? What are the patterns you need to identify when there is a gap down opening in the market, right? I'll try to show you some of the gap down patterns which happen in the market, and also I'll show you some of the stocks, how to select this, how this pattern will work, and also we'll try to identify some live trading opportunities. So now let me just share you the chart of Nifty, and we'll show you exactly how we can identify this gap down or shorting opportunities in Nifty. So till now we discussed about the bullish patterns. We discussed about gap up, or maybe if there is a consolidation pattern, how we can look for buying opportunities, and also we shown some of the trades what we done in the morning session by looking at this particular report. Now, by looking at the Nifty chart, what we are expecting is we are expecting Nifty to go down, right? Okay, the Nifty had a fall here, it has consolidated, but it has broken this pivot line and it is showing weakness here. The trend is showing weakness, and you can see this particular candle of Nifty, right? We are expecting Nifty to go down. So that's the reason we have bought at the money 15,300 put option, right? We bought this particular put option, and let me show you a screen of the live trade what we are holding, so that we get a clarity about how exactly we identify this kind of opportunities in trading, right? In this example, right, you can see we are expecting Nifty to go down. We bought 15,300 put, and we try to capture this momentum which is on the downside. But we just need to wait and watch whether the Nifty will fall down or will it try to take us a reversal. Because what happens is, what are the trades we are doing for intraday? It's everything is with a risk and reward. We are having the risk and also we are having the reward, and we are just following the system according to that. You can just observe this particular trade what we've done, so that you get a clarity of exactly how we look for buying or selling opportunities, how we decide the strike price, and what exactly is the stop loss and target level, right? You can see that Nifty is going down, right? And also we are making profit from 15,300 put. You can see that this was a small trade, and the reason I showed you this because a lot of people maybe they wanted to see some live trade, so that we try to capture a small profit from this particular momentum, so that you get an idea how exactly you can spot for buying or selling opportunities in Nifty. So you can see in this particular chart, what happened is we expected Nifty to break this particular level of pivot. But what happened is Nifty did not break this. It took a support here. You can see here, Nifty tried to push back. We are expecting Nifty to go down. But what happened is there is a pivot level here. It's not a strong confirmation to sell. And we are expecting, okay, if Nifty, if it falls below this level, then we look for shorting opportunities and we may seek further downside. And the reason why we taken this trade is just to show you in the live market how exactly we look for opportunities. But we are expecting Nifty to go down, and by looking at the data of technical, and we are seeing the trend is going downwards. And this is what is a consolidation pattern. And you can see that the trend is downwards here. We had a gap down opening, and whenever there is a breakdown at this particular level, we may see further downside in this today's particular Nifty chart. These are the bearish patterns, where you can see that today's the trade what we done, which I showed you in the previous example. We expected this is the pattern which is formed in the Nifty. There is a gap down, there is a bearish candle, there is a consolidation, and we are waiting for this breakout in the Nifty. If the breakout happens, then Nifty will likely to go downward. Maybe it will go another 50 points downside. So that is what we are looking at this particular breakout. But the breakout was not so strong. The candle reversed from this particular level. You can see this is what has happened in this particular trade, right? You can see this particular first, second, third, fourth, fifth, sixth, seventh candle. This is what happened in today's trade, right? The candle reversed from this. So again, we need to wait for some more time to get a clarity. And once we have a breakout or breakdown on the downside, then we look for shorting opportunities. This is how you capture this small momentum in the shorter time frame. And the concepts what I'm sharing you in this today's session, it will work for intraday, it will work for longer time frame, and also it will work for swing trading also. I'll come back to the swing trading in the meanwhile, but till now, just try to understand these concepts, how exactly this pattern will work in the real market. So thank you, Mukesh. Thank you, Avinash. Thank you, Kiran. I can see that everybody able to follow this. Thank you for your valuable comments, and thank you very much for being so interactive. So exactly, you can see in this particular patterns, we discussed about 4 different patterns. to our bullish patterns where we're looking for buying opportunities. Bullish patterns in the morning sessions, we traded these two trades where we look for consolidation breakout. This pattern we traded in today's account. And the second trade, what we did was the consolidation. We're looking for Nifty to go down. We are expecting the market to go down. That is what we are waiting now. And we are waiting for this support to be broken. If this support will break, then we can see the further downside. Then we can look for buying the put option, selling the call option, or maybe you can also sell the futures, right? There are many different ways you can make money. But in this trade, what we're doing, we are just going with options because buying options requires less capital, you know that, and we are engaging, we are trading with a huge quantity, and we are trying to capture the small momentum so that we get the decent profits in that particular account. As in this today's session, I covered about the intraday patterns. I tried to explain you the bullish patterns, the bearish patterns, and all. But now I will try to explain you the concepts on
algo trading
opportunities by using the same candlestick pattern. Right?
Please do watch the part 2 of intraday price action trading with algorithm from the link below. Thank you.